Inspiration. Inspirations we can draw from any corner of our life. It could be from a place, it could be from a thing, or it could be from a person. Today in this VIF talk, I'm going to talk to someone who is inspiring one full generation of entrepreneurs in our country. Someone whom I've really admired for the work, for the effort, for the inclusiveness he is bringing into this entire financial market ecosystem of India. Yes, I'm talking about Nithin Kamath. In this VIF talk, we are going to talk about him, about his business, about life as an entrepreneur, about technology, and about future of financial market. So you're going to enjoy this one. If you have joined me for the first time, my name is Vivek Bajaj and I've been in market for a long period of time and this is my channel. Hope you enjoy this conversation with Nithin. Hey Nithin, how are you doing?
Good, thanks. Nice catching up with you, Vivek. I'm good, thanks.
Fantastic. So I vaguely remember that we met a couple of years ago and I have seen your journey. I've seen how you have grown. Remember there was an NSE event and, there were some awards given few years ago, I think 3-4 years ago, and you emerged as, winner of that region or all over India. And we distinctly talked about why Zerodha is Zerodha, because so much of focus on learning and building new user base, new investor base, and that has paid so well. I have to congratulate you for that.
No, I mean, there's been a lot of right place, right time in this journey. And some of these bets we've taken, has kind of played out. A lot of people think it's an overnight success, but it doesn't. I mean, I think we first met in 2015, 16.
Yeah.
And I was quite excited when I was at your office because I had never seen so many, trader workstation in one place, So, it's been a very kind of interesting but very rewarding journey as such. So.
Yeah, and we all are very excited. We are in a common group of exchange members called and people have different kind of opinions, and when they come out, they have obviously sharing their opinions. But I always say this, that we are really waiting for that Zerodha IPO to come someday so that we can become part of this story. But you are so stubborn; you are not planning for it.
Yeah, I know. I mean, I don't know if it's the smart thing to do because, like a lot of people I know have been saying, like now is the right time, right? As in, but then, like internally also we're actually recently discussing, and I was just talking about the biggest advantage we have as a business today is the freedom we have to operate the business the way we want.
Yeah.
Right. And so a lot of these initiatives that you've seen that over the last few years. I doubt if they would have come out truly if there was an agenda of revenue or growth as a business, right? I mean, today we do it with zero agendas. I mean, we do it because we love doing it, and we have ended up doing well as a business as well. But that was not the primary reason for a lot of these initiatives that we have. I mean, the only reason I think we are not raising money is because we don't need the money. I mean, we are a profitable business. So I don't know what we will do with more money because we don't advertise or, I mean, I think today's biggest cost is really, the cost of acquisition of a customer. And second is, like I said, I mean, this whole, what is the right timing? I don't know if it is the right question. I mean, I don't look at like IPO as an exit, because I think a lot of, my friends are focused around IPOing their company, but I think IPO just brings on so much more responsibility, right? As in you're on your cap table, you suddenly have millions of people who potentially can't afford to take too much risk. So your obligation to them as a promoter actually goes up, right? And so personally, I'm very fearful of taking that obligation because of the industry we are in, right?
Yeah.
We are a very unpredictable industry, right? I mean, while, I keep talking internally as well that we might have a 50-60% haircut in our revenues any day. As in, you can get up tomorrow morning, and day after onwards, our number of users, the revenue, all of them can be down 50% because of certain market condition or certain regulation, right? I mean, so the risks are so high, and in a situation like this, how do you really take obligation of retail investors, right? I mean, if we were a more predictable business, maybe, we would have, done an IPO, right? But we are, very unpredictable as such. So, and third, as I said, not potentially we could go to VCs and PEs. I've almost gotten like blank checks in the last couple of years. We could have potentially raised money from people who can afford to take risk.
Yeah.
But the problem with taking money from them is, like I said, you then your focus as a business becomes revenue and growth, because that's why they're giving you the money. And, you end up potentially kind of missing out on some of those things that you like to do as a business. And today, I think it's a USP for us. If you ask me what is the biggest edge on our competition, we are in it not to win, right? As in, because, I think there's a, like when people are, focused on becoming one, number two, or, certain revenue growth, you're losing focus on the true core essence of running a business. And that's how we think about all of this.
True. I think people who know you for long, they really know you. So, they would appreciate all these things which you have said. And I'm one of them who have seen you from early days. But Nithin, today, I'm going to wear hat of two distinct personalities. One would be an entrepreneur, a fintech new entrepreneur, or a budding one who wants to do something and want to understand how to evaluate opportunities or how to get into opportunities. And second one will be a retail investor, a trader. Some of them could be your client as well. And there are certain issues which they want to talk to you and get it clarified. So I have a lot of points in my mind. So please allow me to be as candid as possible, because a lot of people are going to see this and I want everyone to get a clarity on a lot of things which they have in their mind, right? Can we do that?
No, perfect. Sounds
awesome. Good. So let me start with, the opportunity which you identified. And you are very humble. You always say that we just did right thing at the right time, but definitely you knew that there is an opportunity. So right. How did you identify the opportunity? And can you share with us some, formula or some framework which one should look at to identify big opportunities in future?
It sounds weird when I say this, this whole right place, right time, but it truly is it, it is a lot of happenstance in life. I don't think you can really potentially, if I had to rebuild Zerodha from today, I don't think there's an opportunity. I'm very, open about it, and because the market conditions have changed. There isn't, so when we started in 2010, it was like the worst time to start a broking firm, right? Yeah. Coming back on financial crisis, the volumes had dipped, right? Now, if I was smart at that time looking for an opportunity, Zerodha wouldn't have been an opportunity, because it was really a stupid time to start a broking business, right? So why did I start in 2010? In a way, it was a foolishness, because, but I happened to be in a situation where, I ended up spotting this NSE Now platform, right? Which NSE was giving free of cost. So then I thought, what, if platform is coming for free, is there a way to build a very low cost broking business, right? That was the opportunity, right? And how did that opportunity come by? I think each one of us, I think we need to pick one area that we love, and just go as deep as possible. Learn as much about that, that one thing. Now, the question is, how do you figure that one thing that you like to love or do? That again is it's a lottery ticket, right? When I spend time with my son, my biggest thing on my hand right now is to help him figure what he likes to do in life, right? What he's good at, as in, and to do that, you have to end up picking a lot of things, right? So I think if you were to ask me what have I done right in my life, I think I've been generally a jack of all trades. I've played almost every type of sport. I've learned at least 4 or 5 different types of musical instruments. So I just kept switching between different things, and somewhere along the way, I realized trading is what I love, and stock markets is what I love. And once I figured that this is what I love, as in, I had, I think, the largest Yahoo Messenger group in 2002.
I remember.
Yahoo Messenger was like this community where, right? So this whole trading wasn't, for me, the love wasn't just trading. It was about interacting with customers. What you're doing, right? I know that you're doing this out of love and not really, with any money objective, right? As in, right? And this is essentially what I was doing this with, right? As in, and then, happenstance, luck, whatever we call it, we decided to start a broking firm in 2010. Luck, no one gave us money, right? Because if someone had given us money, potentially the direction the business would have taken would have been completely different.
True.
So it's like that. But I think what generally I tell people when they ask me, because today, the issue with success, right, is an issue with making money is suddenly people think that you're right everywhere. You're not. I mean, I'm as right as, like a 20-year-old. I mean,
Yeah.
I'm probably a little wiser, but, so that whole odds of, just because you made money is right about everything in life is actually a misnomer, So yeah, but generally when people come to me and ask me, Nithin, what do I do? I'm starting life, I'm starting a career, I'm starting a business. My usual thing is, is before you start, before you go cut a tree, you need to go chop your axe. Right?
Yeah.
So you need to sharpen your axe, right? As in, so I tell usually that, if you want to do a business, first go spend time getting better at that. Right? I mean, go work under a broker. One of the reasons Zerodha is because I'd spent 11, 12 years before Zerodha as a trader, interacting with the broking, traders and, building these communities, etc. And then kind of Zerodha was a natural extension. So, so when, like even today, when I look at our competitors, I think the edge is the deep understanding that was built before Zerodha and not after Zerodha, right? I mean, that understanding with traders and communities. So I think, yeah, everyone has to kind of eventually end up picking one thing in life and saying, what, let me do this one thing well. Now, will that one thing lead to success? I mean, goddess of luck has to smile on you, right? As in, and I have a very interesting philosophy around how to get lucky in life. If more number of people want you to get lucky, the higher the chances of you getting lucky, right? So, in the sense, so right from your team to your customers, right? As in your first customers, because it all starts with your team, right? I mean, does your team really want you to get lucky, want you to do well in life, right? So you need to build a culture of that where your team firstly wants to, get lucky. Then your customer should feel like, what, you need this bloke to get lucky, right? As in, and that's the only reason where we are today, right? Because we have spent 0 rupees on advertisement till date, right? There are 8.5 million customers who have paid 300 to 500 rupees to open an account with us. And they've all come because, one of our existing customers probably said something nice about us. And they said something nice about us because we have continuously done what is right for the customer. So in a sense, the problem is, when you start building a business, you get into this whole, weighing between short-term benefits versus long-term benefits, right? As in what when you start picking up stuff which is shorter-term benefits, they're usually wrong in the longer term, right? So those are some of the choices I think you should be conscious about, when anything you do in life, right? As in, if you want to be a great engineer, you go to an engineering college and you decide not to study. I mean, it's a bad choice, right? And so it's like that. I don't really think there's any science behind this, and I think it's a lot of, like I said, a lot of luck. I mean, right from your genetic, composition. So I mean, are you genetically like, I want to play guitar like Mark Knopfler, but can I ever play it? Maybe not, because I know I'm not genetically blessed to be like Mark Knopfler, right? As in, so you need to figure, I think, what you are maybe good at. Like my mom used to teach music for through my entire childhood, right? Like every morning I used to get up and there used to be at least 10 kids, and she used to teach the veena. There were a lot of passionate kids, but hopelessly not talented, right? They will be so passionately, they'll come before the class, they'll practice, and then they will, continue, like doing with passion. So I think, sometimes you have to be honest to yourself, saying, is it something I'm good at? Because I don't think every person can build a business, right? I mean, you need to be wired in a certain way to be able to build a business. So you need to be honest about it. Like, like how we have a stop loss in trading, I think there has to be a large stop loss in business, because you can, if you don't put the stop loss in terms of money and time in any aspect in life, I mean, you can keep getting sucked into it, right? I mean, the losses can potentially be unlimited. So.
True. So when we met a couple of months ago, I remember you talked about Robinhood and the emergence of low cost broking in US market, and you exactly knew what is happening there. So do you think being open to what is happening globally and knowing deep about your industry is also one of the prerequisite of a starting entrepreneur?
Absolutely. I mean, it's a no-brainer. I mean, I think I know more about financials of our competitors than they themselves do, right? Because I have balance sheets of, like now is the time, some of the balance sheets coming out on our MCA, right? So our chartered accountant, I mean, I keep pinging him saying whose financials are updated, right? So yeah, it's not just internationally, I mean, I think even locally, I spend a lot of time just studying competition, just spending a lot of time on, I mean, I'm interacting with the customer. We have a bunch of online initiatives. So, I'm interacting there as well. So yeah, so I mean, see, when we started Zerodha, the idea wasn't unique. I mean, it was really inspired, right? I mean, like, inspired from, Charles Schwab, E-Trades of the world, right? As in, I mean, this, US had gone discount broking like a decade and a half before we went, so actually 2 decades, right? I mean, early 90s is when US started with the whole $7 a trade and etc. We started it in 2010. So there was like a 20-year gap, I mean, the question at that point was, why isn't anyone doing it? Because the cost of technology is too high.
Yeah.
So for us, when we started the business, when the technology was essentially free of cost, we said, dude, maybe now is the time to do 20 rupees a trade, right? So, yeah. So I think, like I said, right, I think the whole consciousness and being, that awareness, that only comes through knowledge. As in, you need to know about every aspect. I mean, if you're hoping to get lucky doing nothing in life, I mean, you need to be born to a really rich guy to get lucky. So otherwise, there isn't any other luck. So to get lucky, I think there is a lot of hard work. I mean, like, it isn't. You can't just sit in one place. So we spend. I mean, even today, I spend at least 3-4 hours interacting with our customers, because for me, I think that's really the way I am building my intelligence on what a customer needs are.
True.
And so I think it should be like that for every person building. I mean, it's not even business, right? I mean, any professional, right? I mean, I think like each one of us who wants to grow in our life professionally or as a business, I think we need to give a lot of time to ourselves to improve, and not really, because a lot of folks end up chasing material goals versus really getting better at stuff in life. Now the problem is, when you chase material goals, the way to get to the material goals may not be the right ways, right? May not help you grow in your life. I personally think, when you don't have material goals and you're just saying, what, I need to get better every day at something, then I think that material goals automatically tend to meet at some point in time, and it's, I mean, like, these are very easy things to say, but, very tough to follow. But, but I've blown up 2 times in my life. So, so these are all, like I said, these are all lessons that have come the hard way. It isn't that I was born and suddenly, I had this awareness of all of this. So, the last time I blew out, I worked in a call center for 3-4 years. So, and I think most of my life lessons I've actually learned in my call center, because in my call center days, I used to sell on the phone. And I think the best way to learn any, I think that the skill, if you're not a programmer, because I think programmer in today's world, good programmer is like an X-Men. I mean, if you're not someone who can build your products on your own, I think you need to know how to sell, right? And there is no better way to sell other than actually selling, picking up a phone or meeting someone and selling, because if you're building a business or whatever you do in life, I think you need to know how to sell well, right? I mean, I think Zerodha is Zerodha today is because I think we have sold Zerodha in a way we think is the right way to sell it, so right, and that's again, it's not an easy skill to pick up, and so yeah, so I give a lot of credit, to my call center days again to have. I don't really like to be in front of camera because I feel very conscious, but generally, if you give me a phone and you say, Nithin, sell, I love doing that even today, because.
Awesome. That's a great thought for youngsters, that you have to learn the art of selling first. Let's come back to market a bit. Let's discuss the evolution of the market, how it has evolved. So, I also come from the generation who has gone to pit trading with his father, and we have seen the evolution, NSC, and then the whole online transaction happening. We were user of Neat Terminal. So we have seen that. And then algo trading came and we became part of the algo trading. So this whole evolution of the market has become so technology inclusive that not just as a service provider, but as a consumer of this market, investor or trader, one has to be extremely tech savvy. So do you think this is the need of the hour, that if you want to survive in this market, you have to adopt technology? Otherwise, your future will definitely be a short-term future.
See, as a business, it's a no-brainer.
Yeah.
Right? I mean, if you're a business today, forget stockbroking. You pick up any business. You're doing grocery, right?
Yeah.
You still have to adopt technology. As in,
Yeah.
like, I think, we are in a world where technology and its influence on us is going to only increase in time. I don't think anyone who's thinking of business can really say, you know what, I don't want to, use technology and somehow I'll survive. He's being deluded, to be very honest.
Mm-hmm.
Right now, as a trader, as a retail investor, does technology really give you an edge? Is a question that I've been asking, like for many years, right?
Okay.
So of course, you're trying to do like an arbitrage trading strategy. Of course, technology is an edge. You can't be manually sitting in front of a computer and try to do arbitrage, right? It's impossible, right? But there are, because see, the whole idea with technology, right? As in, if a trader is using it, one is for backtesting, right? As in, you're going to go back in time, somehow backtest and figure if this shit works in the future or not, right? As in, but the whole thing in the market is markets are random, right? As in, what's happened in the past doesn't repeat in the future. So now this whole, like, that's where, see, I think, like, like when someone asked me, Nithin, does technical analysis work? Right?
Yeah.
I think technical analysis works because most strategies don't allow you to go against the trend, right? And generally markets are trending either up or down, right? As in,
right.
So if most strategies don't allow you to go against the trend, your chances of losing money is very less. It's not zero. It's not less. It's comparatively less, right? And that's why I think basically technical analysis works, right? So similarly, now if you use a program, you backtest strategies, etc. Apart from, of course, if it is, like I said, put call parity, like strategies where you're trying to take an advantage on mispricing. There it's a no-brainer. Without technology, you can't go anywhere. But all these directional strategies, which is buy and hold kind of strategies, I'm still not sure if technology really helps, right? Because I know some really, really smart traders who've made billions in their lives. They look at the Bloomberg, they do whatever, they do analysis, etc. At the end of the day, it's essentially a gut-based trade. So the trade is essentially based on instincts. And I think what a lot of people miss out, again, like I was talking about this whole in life, not chasing material goals and doing what is right and get better, right? I think the mistake a lot of investors and traders do is that people are constantly chasing the next best strategy that can make you money, right? What is the next best algo? What is the next best, like technical analysis indicator or whatever, right? Because I don't think there is one, right? I think what makes you money in the long run is just discipline in terms of risk management, right? As in, it's about just managing your money is what is important. And can you become rich in the markets? Can you make a lot of money? I think that's, again, goes back to building business. It's a lot of luck involved. Of course, maybe on one of these trades where you took a 5% exposure to a stock, the stock went up 200 times and it made you a lot of money. But if you had 100% exposure in that stock, would you be able to sit through when it becomes 200 times? You cannot, right? If say I had 1 lakh rupees and I put entire 1 lakh rupees on stock A, and stock A went up 500%, right? You're going to be nervous as hell, right? As in, if there is a drawdown of 20%, you'll probably think, oh, you know what, I've made enough profit, let me book it out.
True.
Right? But if the exposure to that stock A is only 5% of your portfolio, you will stick through. The odds of you sticking through when you get lucky is much higher.
True.
Right? I think stock market, I keep talking about it. Stock market is probably the toughest place in the world to make easy money. It's probably easier to make money buying lottery tickets. The reason is because when you hit a lottery, right, you stop buying lottery tickets mostly. Right? You'll go use it, buy a house, you'll buy a car or whatever, right? But if you make a lot of money on a lucky trade, you'll probably use it to trade more, and if you trade it using bad habits, you'll probably give it all back, So I remember in 2008 when the markets crashed, one of our customers, I used to be a sub-broker for Reliance Money, had 1 lakh rupees with him, had bought like deep out of the money calls, became 2.5 crores in 2 days. Right? Sorry, deep out of the money puts, became 2.5 in 2 days. And he gave it all back in 1.5 years. He lost the entire 2.5 crores plus some more in the next, because if you make money in the wrong way, you will give it up, right? Like I said, it isn't like playing lotteries, because a lot of people approach trading and investing as lotteries, thinking that, one trade, if I make money, I'll somehow become rich. You won't, because you will end up giving it all back if you have made money the wrong way, right? So, and which is why it's very important to not focus on money and focus on risk management and, like discipline, etc. Because you're in it to make money in the long run. You don't want short-term volatility, because short-term volatility just creates unnecessary volatility in your personal life as well. So yeah, so I think that's the right way to approach, which is yes, programming helps, if you're doing a certain type of strategy, right? But programming necessarily doesn't really give you a disadvantage if you're doing, a buy and hold kind of strategies, which, we are taking for longer term, because all the programming that you're doing today is essentially to backtest and to be quickly able to execute it, right? That's where programming helps, right? Of course, if tomorrow there is true AI, right? True artificial, there is no true artificial, every other person claims there's artificial, but there's no true AI in this world, right? Because the day there's true AI, we're hitting that point where Terminator movie, etc. Stuff like that will happen, right? Because, computers automatically will think what they should do. So there's no true AI. But as and when we get closer to true AI, maybe, it will probably become tough to make money for retail investors without programming knowledge. And maybe at that time, you just give money to that true AI. No, but I think by the time there's true AI, maybe the true AI will figure a way to keep us entertained. Probably we'll be like in Matrix, right? We'll all be in a metaverse looking at something, enjoying, and everything else will be happening on its own. But I think we're still a long way away from that.
So you did mention in one of your interviews that there is no AI in market. You have not seen the application of AI in stock market, but there are many people who claim that they're using AI to trade. So because you read so much and you're exposed so much, could you please simplify this, that if at all one has to use AI in market, what could be the application? How can one use it?
See, the thing is, I think AI is generally mistaken today, right? When people backtest and, and then, the backtested result, in a real life environment gives you it says, buy this stock because it has made you money 80 times in the last 100 times. Is that AI? It's not. How's that AI? It's just, right? AI is where, without you feeding it any data. Firstly, AI is where the program automatically decides what to buy, sell. And then it keeps improving it using newer data. And I don't know how to really explain it, but I'm trying to find a simple way to explain. Simple way to explain is, like a true AI will be like a human mind, which gets better on its own. Like if you have to sit and redo a program, that means it's a program that you're, say, assuming it's a moving average strategy, right? And you're backtesting over time. Now, tomorrow you decide that this moving average strategy is not right. I need to change it to another moving average strategy. It's not AI. That's you involving in it. So, now there are people who would say if those many live signals, say 10 live signals using a 20 moving average didn't work, adjust it to 30 moving average, 30-day moving average. That's also not AI, because it's essentially you have defined the program, which is doing what you're asking it to do. Right? The day the program decides what it wants to do is the day when it's AI, right? As in, without you defining what it wants it to do, right? As in, and for that, like I said, it is it's still, a long time away, sort of from stuff like that happening. So.
Sure. So there are a lot of new guys who have joined the system, and they have this common question that, sir, is it worth it? Is it a full-time career? Will I be able to make money every month? And, I have my own answers, but I want to hear it from you, because you have seen many new guys coming into your system, and,
Right.
you kind of make a broader judgment about what is happening in the market. What would you advise them who have come in last 2 years, that is it a career? And can
Right.
you make a consistent money? And if yes, how?
Yeah. No, I mean, see, like trading is like any other business, right? I mean, the odds of okay. So firstly, I think we need to define an active trader who's trying to trade for a living,
Yeah.
versus an investor, who has a certain residual income, and then he using that, and then his savings to invest in the markets and maybe take a few trades, right? So if you were to talk about people who are looking at trading for a living, right, as in kind of survive on trading, that is exactly like running a business, right?
Okay.
The odds of succeeding is 1 in 100. I mean, like you look around, right? As in you look around you and find 100 people who started businesses,
Yeah.
and try to figure how many actually survived 5 years of running their business.
Yeah.
You'll probably be less than 1 in every 100.
Yeah.
Right. And it's the same at markets as well. And I've said this before, that the thing about stock market, the thing about trading is, the easiest thing about trading is opening a trading account and taking a trade, right? I mean, that's the only easy thing, I mean.
And you have made it so easy now further.
I mean, unfortunately, like, this is something that we internally discuss, I mean, like, we have a lot of these philosophical debates that we have internally, and where we question stuff like this is making onboarding simple, instant, is actually good or bad? I mean, it's good for the business, there's no doubt. But is it really good or bad in the long run for the customers, right? Because now because onboarding used to be a 4-day, 5-day process, most people who didn't have keen intent to do it wouldn't ever onboard before.
True.
Right? Like today, on the fly, say at 10 a.m., someone friend of yours tells you, what, I bought this stock and made money. You're like, hey, how? At 10:15 a.m. you open an account. At 10:30 a.m. you're taking a trade. I mean, which is
so fast, yeah.
Right? It's just fast, which is, like, as I said, everything has second order effects in life, and the unwanted second order effect with something like very quick onboarding, or even actually low cost broking. I personally, morally, I keep thinking about this, like this whole philosophical debate. Is it good or bad? Because a lot of times what happens is, people think because it's low cost, I can somehow quickly get in, get out of stocks. It doesn't work like that. I mean, you can't quickly get in, get out of stocks 1,000 times and make money at the end of 1,000, because you're losing on impact cost, you're losing on STT, you're losing on market volatility. So can low cost, because there is enough studies now, I think in the US, just before Robinhood IPO, there was a study put out there saying that low cost maybe is actually detrimental to customers versus actually helping customers, right? So but I mean, like I said, I need to be aware, conscious about it. I don't know what to do to fix it, right?
Actually, you have that conscious mind because there's no one else who is corrupting your mind, and that's the reason why you don't want external investors to be there on your cap table. So
yeah, I mean, I couldn't say something like this if there was an external investor. So this, if I said something like this, I'm sure I would get burned on a fire. But yeah, so it is.
Let's come back to that topic which you were saying. Sorry to interrupt you in the middle. So active versus passive trader.
Oh, sorry. Yeah.
Suppose we have to give numbers to this, that how many trades if someone does in a month, you would say he or she is an active trader?
No, I'd say anyone who is trading for a living.
For a living.
I mean, even it's one trade a month, right? I mean,
okay, sure.
If you're depending on trading to actually make a living,
right?
I would consider that person as a active trader.
Okay.
And what we've seen is the odds of success is so goes up so exponentially if you're not trading for a living.
Yeah.
Right? Like people who are not, who don't have to make a rupee from the market to survive, right, tend to do much better when they're trading and investing. And that's why, I keep talking about it, because, when that the odds are so different, like a lot of my friends, like, I want to quit my job, trade. I'm like, dude, what are you smoking? You know what? So, why don't you put some small amount of money, see how it plays out? If you make money consistently, then maybe think about quitting a job, right? And because, like, see, the thing is, I think trading is all about handling your fear and greed, right? As in, it's just that, right? I mean, how you manage your emotions, your money, because how you manage your money is essentially based on how you manage your emotions, right? And if there's so much pressure to make money from that trading, to survive full time, it's just not everyone can do well under the pressure. Like, there are so many people who sing amazing in the bathroom, but you put them in front of 10 people, they can't sing. So, right? And it's like that. So, people kind of crumble under pressure. And but if it's trading for a living, the odds are very low. If you're doing something else in life and trading, the odds increases. But the highest chance of making money is purely by investing. Right now, I mean, like, it's a give. I mean, because I think it's also like a little bit of recency bias, because India has had a good bull run over the last 8-10 years, and our business has grown in the last 8-10 years. So anyone who bought stocks and held on to it mostly has made money. So right. So, but you never know, right? I mean, there could be a bear market around the corner, and then in the next 4-5 years, buying and holding a stock may not make you money. So. But generally, the history we've had as a business, and even me, interacting with customers over the last 20 years, India generally has been a bull market. So investing has the highest odds of making money, followed by people who have a living, and within, who earn something else for a living, and they allocate some portion of money to trading. And within that audience, lesser the allocation, higher the odds of making money. So, like I said, it eventually boils down to fear and greed, and the more there is at stake, the higher the fear and greed. So it's just that. That you don't need anything else to figure what causes ups and downs for people in the markets.
What a clear, candid, and that if people don't trade, you don't make money. But still, you are saying that the odd is not in your favor. So that's pretty honest statements from you. Nithin, you have been a trader earlier. And obviously now I don't think so you trade so actively, right? Do you trade?
No, I mean, I test, I'm usually placing all this one share, one lot orders just to test a platform.
To test the platform, yeah.
But the thing is, like, to be very honest, like, there's a question I get asked. I think I'm in the biggest trade of my life, which is Zerodha, actually. Right? I don't think like, trading ends in the stock markets. Like, I think everything you do with your time is really a trade. Like, and I think that's how traders should approach life. As in, like, you do what can give you maximum reward to the risk you're taking, right? And is it stocks? You do stocks. You do whatever, as in risk-adjusted returns, what can give you the maximum, you go do it. I mean, if you're a great singer and you're trying to trade the markets, it's stupid, go sing, record, like, the reason I decided to not trade was because I realized that I'm a better broker than a trader. I mean, the reason Nikhil, my younger brother, continued trading is because he's a better trader than a broker, so, right. So I think it's about finding that in life. So while I don't really trade stocks, but I think it's Zerodha, I'm in the biggest trade in my life.
Sure. But you do invest right now?
I mean, only through Rainmatter. So the incubator.
But that is Rainmatter is for unlisted, right? For startups.
Yeah, for startups. So in the markets, Nikhil manages everything. So
okay. So I can't seek some investment advice from you right now.
I mean, I can give you general gyan, but no, I mean, I don't really track, like, what's happening. I mean, I know Nifty is down, say 0.3% today, but do I know what stock is up, what stock is down? I don't, because I realize that, if I take a trade and I'm trying to do business, I'm distracted, so I don't want to be
True that.
Distracted. Yeah.
So Nithin, I want to talk to you about technology and Zerodha technology. Okay.
Right.
So how is the morning like for Nithin Kamath? The morning 9:15. How is your heart?
I mean, now I'm used to it. So, but I think the first time we saw scale was 2017-18, right? So once Aadhaar came on board, and then people started opening accounts online instantly. So suddenly we were opening 3,000-4,000 accounts, and we were opening 500,000 accounts. We started opening 3,000-4,000 accounts a month, and all systems started getting tested. And like in our business, while we have the best technology team, I think, in this country with Kailash and our tech team, but we had a lot of external dependencies. So over the last from 2015 is when we launched Kite. We've been slowly and steadily removing each of these external dependencies. There was a back office vendor, there's a front end vendor, there is like a guy who's built your front end, like a desktop front end. Because each of those dependencies were just increasing risk for us exponentially. We kept killing it. We kept improving on our technology, like even a back office platform. When we started the business, there was not too much money on the table. So the first back office vendor we partnered was the one who gave it to me for free. He said, "This is my new version. You beta test for it. So first year will be free of cost." In my head, I was like, you know what? As soon as we do well, we will shift out. It took us 7 years to shift out, right? Because that's the thing about technology, right? Is that I think the most important thing about technology is, I think, my biggest learning from Kailash, and who's our CTO, and he's like, he's my guru as such, because the way he builds tech is essentially the way he leads his life as well. It's about being constantly aware about the any debt that you take. Especially in technology, you call it a technological debt.
Yeah.
Right? In this hurry to do something fast, right? You compromise things which will come back to haunt you for years together, right? Like for example, in 2010, that me deciding on the vendor because the cost was very low, was a technology debt for 7 years of our life. We got extremely lucky that we didn't have competition at that time, right? If it was a very competitive world, we would have gotten cleaned up, right? And now, so even today, when I meet, people starting businesses is trying to quickly use vendor products to build it, I tell them, dude, it feels like, you can get away from a vendor very soon. But once it's entrenched, the debt, it kind of, it is quite scary, how quickly, all these technological choices that you make can really affect all aspects of a business, So the big issue for us was really in 2017-18, when we were scaling up very quickly and our vendors weren't able to scale up quickly. And because of which, but we are the front end, right? So we got a lot of flack. In 2017, I think every morning I used to get up like, boss, let this market open. And I used to wish for days where market does nothing. I'm like, can the market open and not do anything for the whole day? But then, I think we learned our lessons, and our tech team has done a great job. Like 2020 March and April were probably the most volatile times broking industry has seen.
True.
Right. In 2008, there was not this much trading activity, right?
Yeah.
So 2020 March, April was infinitely more trading activity, right? So, and we didn't have a single downtime, not even a minute in that period. Some of these Robinhood, etc., was down for days together at that time. So, so now I'm quite peaceful, So at 9:15, it doesn't really bother. But in 2017-18, I was really nervous every morning.
True. Nithin, I want you to use this platform and communicate this to all my followers, my learners, that at times people say that when there is too much volatility in market, Zerodha system is down.
Right.
And obviously there is a logic behind it. It is not that someone is putting this down, right? So I want you to speak your heart out, say that why it happens at times.
No, see, the thing is, this is a legacy issue for us, right? Firstly, we are down all the time. 2017-18 was bad. We had a few incidents, and this whole thing has carried on from then. Now, if you compare, see, the thing is, firstly, I think everyone needs to understand that no technology platform can claim that they're going to be up 24/7. 100%. impossible, right? As
Impossible.
in Google
True.
has been down for, I don't know, like 10 hours this year. So there is no way anyone can claim. Now, when an issue happens at Zerodha, right, we are 15% of the market, right? And most of our audience are social media active audience, right? As in, like chart is not ticking at 9:15 a.m. will be trending on Twitter. I'm like, I know. See, the thing is, our job is to offer charts, right? But chart, our charts are dependent on connectivity to the exchanges. Say, assuming someday there was a flapping of network or whatever, right? and the charts didn't update for like 30 seconds. We are trending there saying that, what, something is wrong at Zerodha, and news media is flashing it, etc. Because that's the flip side of the business. When you grow too big, you are just getting a lot of unwanted attention as well. If I'll confidently say that in terms of uptimes, I think we are by far the best in this country. And I would actually, if I were to go compare, because we actively track each one of our competition really closely, so, right. And if you actually have to take the last 24 months and absolute number of, time, in terms of minutes, the platform's down, we are by far the lowest in this country. We are by far the lowest, even if you compare us to some of the international platforms like Robinhood, etc. And also, but that's not an excuse. Even if we're down 5 minutes in a year, that's not an excuse. And we are constantly working on getting better at it, right? But see, if orders are going through and charts not working, now can you say that trading is down? Maybe not, right? But it's considered as trading is down, right? And no, but like I said, that is the biggest task that we have on our team, which is so the thing is, at the end of the day, right, we are dependent. Customers see us, but at the end of the day, you've been a broker. So how many dependencies we have, right? We have to connect to the exchanges, we have to connect to depositories, to clearing corps, to, in the sense, not for live trading, but I'm saying, like, through the day, you have to do so many things. And like I'll tell you, one of the biggest pain points for us is this lease line flapping, right? So for example, every customer of ours connects to the exchanges via lease lines, and for every lease line, there's a backup, right? As in, if the main line goes down, the backup automatically goes live.
Correct.
Right. But the problem is when the main line flaps, right? A flapping is essentially where the line is not down completely, but it's kind of working intermittently, right? This is a big problem for all brokers, right? As in, because when the line flaps, our systems will not know if the line is down or not. Because if it's down, that you have to go to the backup, right? But if you're not down, you're stuck there, right? And it's a technological nightmare, as in there is no way to solve it, right? If a lease line flaps, if any broker whose lease line flaps, he'll have an issue with that, all the customers connected to the exchanges on that lease line. So it's like I said, some of these can be solved for, some cannot be solved for. But whatever can be solved for, we're constantly working on it.
True. I remember I used to do a lot of commodity trading actively. So one night, I think 11 o'clock, the line got flipped, M6 line got flipped. And when we called exchange and find out, they just said that there was a heavy flow of truck in a highway, because of which I was like, hello. So I think it's a natural part of your business. So one has to live with it if it is down. There's nothing which Zerodha or Nithin Kamath can do. So stop tagging him on Twitter because your chart is not coming.
If people tag me for good things, they're going to tag me for bad things. It's just, that's how life works. So I have no issues with it. It's just that I think what people think is that, Zerodha is like, I remember some news, there was a media discussion on Zerodha should add more servers. I'm like, dude, that was actually quite ridiculous, saying, people who have no idea on what the business, the architecture is, our technology is, to comment on what a potential solution is. If any money can be spent to solve a problem, we have spent it already, right? I don't think, because we are a large business today, and as a large revenue business, and so whatever can be spent to solve a problem, we've already done it, right? If a problem happens, it's not because we at some point decided not to spend some money, or we were trying to be conscious about it. It's not that. It's something else. It's an edge case that showed up. It's it's a lease line flapping or something. Usually, if a problem happens, it doesn't repeat again. So these are sometimes, a lot of times, new problems. Like, in the recent past, for example, something which is absolutely no control of ours is some internet providers suddenly stop, the code stopped displaying. For example, Jio in Chennai, suddenly all Jio mobiles in Chennai don't show live feeds. I mean, we have nothing we can do at that time. I mean, I think recently it happened with, BSNL in Kerala. So all people who are on BSNL network in Kerala, so they essentially stopped WebSocket. WebSockets is how we send stream live data to the platforms. So something went wrong at BSNL. So everyone who was using BSNL couldn't receive WebSockets, not just from Zerodha, from any platform which is sending WebSockets, right? Now it stopped ticking. So now again, we are to be blamed there, right? So a lot of times these are absolutely nothing in our control. And we don't at that point go into blame games, right? I mean, because that is never ending. I mean, you can't really so we try to work with internet service providers wherever possible and see these issues don't happen. But that's like I said, like my toughest part of my life is to deal when there are these issues.
True. So let me come back to evolution of the market. And there was a market when traditional brokers were there who were providing research services, and they were largely catering to HNIs and some retail investors as well. Then the market came to traders who became brokers. For example, Nithin Kamath, or for that matter, Upstock also, I think they had a trading background. So that whole 10-year era belonged to you guys. And now there is a new bunch of brokers who are actually from e-commerce background. They have nothing to do with market, but suddenly because they made good money there or they have good VC backing, they think that in market also they can do very well. So the problem with that model is that they are probably not here to make money only from a single product. They are representing the entire ecosystem that, okay, fine, I will get users from here. Then eventually I'll sell loan to the user. I'll sell insurance to the user. So they are trying to create that ecosystem. So where is this market going? Or you think there is enough opportunity for everyone to stay, to create a niche for themselves and grow in this market?
Yeah, no, I think, see, the thing is, I was planning to talk about this as well. So one of the reasons, like a lot is spoken about Zerodha and our profitability, right? As in terms of how much money we make, etc. Now, if, today our competition, actually not today, over the last 10 years, have been spending anywhere between 3,000 to 4,000 rupees to acquire customers, right? In terms of advertising cost or whatever, right? And we have spent none, right? We do have a partner program, but then it's a percentage of the revenue. So there's no upfront cost. If say we had spent between 3,000 to 4,000 rupees on every customer that has opened an account with us, that was equal to all the profits made in retail broking till date, right? The only reason we're profitable is because we haven't spent money acquiring a customer, right? And a lot of times people come to me and say, Nithin, why don't you do front page newspaper? I said, dude, in this business, the long-term value of a customer is lesser than the cost of acquisition of a customer, right? At the current cross, 20 rupees per trade, 0 for equity investing, direct mutual funds, right? There is no way to make money if you spend 3,000-4,000 rupees. And you rightly said, a lot of these our competitors who are raising a lot of VC money are saying, you know what, I will take the VC money, spend the 3,000-4,000 rupees, acquire the customer, and then find ways to make money. The issue with that strategy is, I don't know if you should be pointing it out, but the thing is, the issue is, I think you end up selling the wrong products to the customer, right? Like a very simple product for us to have offered to our customers was a margin funding product. Right. As in, where, if you're trying to buy 100 shares of Reliance, I tell you, boss, you can buy 200 shares. For the remaining 100 shares, I'll charge you an interest. Right?
And you have the book strength. I'm surprised you have not launched it.
Because it's a horrible product for the customer, right? I mean, it is because one of the reasons, I said, in our 8.5+ million customers, one of the reasons investors have made money is because they have bought stocks with their own full money. If they had bought stocks with leverage, they would have lost money, right? So because, markets are volatile, it goes up and down, when it goes down, you don't, put the margin, your positions get squared off. all of that happens, right? As in, when 2020 happened, if there was a large margin funding book, all of that would have been squared off, and they would have missed the rally, right? As in, but eventually we'll be forced to offer it because, some of our competition today is making it as a USP, right? As in saying, what, you can do buy now, pay later. So now, we will, now our team is saying, what, Nithin, if we don't offer, our customers will go away to someone else. So we will offer it, but if you offer it also, it's gonna be hidden somewhere. We're gonna make it such a way that only if someone wants it and he says Zerodha doesn't offer, he sees it, right? It's not gonna be like a checkout experience, right? You don't have money, pay with credit card. I mean, I don't think we'll ever do it because it's a really horrible product for the customers. So the problem is that, when you acquire customers quickly, and spending a lot of money, then you have pressure to generate revenue, and that's when you can potentially end up doing what is not right for the customer. And when you do something which is not right for the customer, eventually, right, it isn't right for the business as well. While short term you can go up and down, and in a world where people are valuing success based on valuations of a company, it might seem like a successful company, but it isn't. Eventually, if you're not doing what is right for the customer, you're not a successful company. At least that's how I look at life. So it's we need to see how it all plays out. Like I said, maybe there is a product that can be sold which can generate revenue, or maybe I don't know. See, today the problem is, when you think about what are the different things you can sell to the customers you're acquiring, one is, of course, obvious thing is loan. Yeah. I come from a view that loan isn't good for most people, right? So second is insurance. If you sell the right policies, it's a low yielding product. Yeah. Right? So if you want to make money, then you have to probably start selling the wrong products. Yeah. Right. And there isn't, everything else already all the payments have covered for, so in the sense there is already, if you want to build payments experience and all, that fight, you can't really take on PhonePe, Google Pays of the world, that's all, that fight is done and they won that fight already, so it's the opportunity to make money doing alternate stuff is very, very little. We have an NBFC, it's called Zerodha Capital, and we do this loan against securities at a very low interest and etc. 10.5%. So, but we have not spoken about it to our customers. It's kind of a hidden product. So the more time I spend running that thing, the more I've realized the only way to make money in the NBFC is either get people not to pay the loan, or keep charging higher processing fees. Continue, get them to keep churning the portfolio. Just keep churning the loan, because every time they churn the loan, you're making 2.5, whatever, thousand rupees. Is really, there is no money to be made just in terms of margins as a product, right? Because if you subtract the cost of funding from a rate at which you're lending, if you were to try to make money just from that difference, it's almost impossible today, So, so essentially, a lot of these NBFCs are also, have ended up, evolving into something where, money is made indirectly, not in terms of just net interest margins of sorts.
True. So, I find it very weird that people are opening a broking account. They are asking people to invest their surplus capital to entice them to open an account as a broking account. And then they are asking them to take loan, which is such a dichotomy that you are assuming that people don't have money. That's why you're giving them loan, right? So on the first place, why are you asking them to open an account, a broking account? Because they don't have money anyways.
See, the thing is, it's a lot of such unreasonable things are happening on this planet Earth today. So it's just not in broking. So I think it's all because of this excess liquidity in the capital markets around the world. It's just there's so much flush of liquidity that a lot of stuff which would have otherwise not happened is happening today. If there is not so much VC money available, people wouldn't have done stuff like this, right? So true. So it's a lot of this VC money is also helping the country grow. So it's I think you have to just, there are a lot of pluses and minuses in all of this. So
true. Nithin, we also come from that generation who always believed in profitability. So we always see that month on month whether we have made money. In fact, my father still asks me that, "Kya hua? Paisa bana ki nahi bana is mahina?" So we come from that generation, and now the new generation, the guys who are 26, 27, 28, they have been cushioned in such a manner that we just talk about growth. Profit will come eventually. I think that is theory, that thesis is now established in society. So how do you come back from such kind of a disruption or thought process? Because you want to make money. You are not the kind of personality who is okay to just today also, while we are discussing, you're talking about interest cost and whether I'll make money or not. So you are sensitive to that theory still, but world doesn't want to make money. So you as an entrepreneur, how do you combat that pressure?
It's really tough, Raman. Like I said, we got supremely lucky that we started a business, we scaled when there was no competition. If I had to start Zerodha today, there is no way in hell, even with all my experience in life, I don't think there's an opportunity to build a business our scale, because and the way we built it. I would have had to take exactly the same way what our competition is doing, which is go raise a lot of money. See, today, I think the apart from our products, I think what's also placed by our side is the credibility that we have as a brand. Right. And that was built over the last 11 years. Right. You can't buy time. You can buy everything else in life. Right. So that time is really what has helped us grow fast, of being around, doing the right things over, so many years. While a lot of our competitors today are equal to us in maybe number of customers or app downloads, but in terms of AUM, I think we're at least 10x, 15x bigger. Right.
True.
Right. So see, at the end of the day, people keep the securities where they trust, right? And so I think some of the new folks will have a challenge building the trust, right? Because when you don't do right things as a business, building trust takes longer, right? A 500 rupees cash back will get someone with 500 rupees to come on the platform, right? A guy with 50,000 rupees, he'll question saying, dude, why is he giving 500 rupee cash back? Is my money safe in this platform, right? So that's essentially how people think. So I think the way to look at it, that's how I think of it. I think of it saying that if Zerodha had to start today, it would not have been possible. Because we got lucky of being around for a while, I think we have to continue doing what is right for the customer, keep gaining credibility, because the more credibility you gain, the more high value customers, I'm okay if a lot of 10,000, 5 to 10,000 rupee customer don't decide to use Zerodha because we charge an account opening fees, right? But I know that when they have 50,000 rupees on them, if you have the right products, they will come to us. That's how I'm thinking. I'm saying, what, let them grow on other platforms, but I don't want to do stuff, just to gain customers. Because I think we're the only broker in the country today charging account opening fees. We charge from day one, right? And I think that account opening fees right from the start of opening an account, kind of brings the seriousness into it, right? Right? It isn't. We're talking about money, savings, and etc. Right? We're not talking about buying balloons or something like that, right? So like I said, it's worked out for us. It very easily could not have worked out for us. So but for new businesses starting off today, it's become extremely tough to compete without raising. I think see, today as a business, right, there are two ways to win the war. One is deep pockets, right? You raise more money than everyone else. If you're able to raise more money, you will potentially win that battle. Or you build some competency which is very tough to compete in terms of money, right? As in, you build something that is that money can't buy, and then you potentially can survive and do well in that industry. It's very tough to do that in a very commoditized kind of an industry, right? Like a payment app. Right? It's very tough because payment apps are very simple commoditized products. So it is, unless you spend a lot of money, it's someone else can really catch up with you very, very soon. So but yeah, if you're a really technical kind of a product, which is a really tough product to build, I think you can build a product and not worry about someone with deep pockets. Because a lot of people, I also was from the same camp. Okay, I thought money can solve all problems, in the sense, you raise money, you throw people at problems, it can solve problem. Like I said, for me, my life guru is Kailash, who's our CTO, and is like and I've learned more life lessons from him than anyone else. And my outlook towards business and everything changed, from 2013 once he joined us, right? Because I realized that throwing people and money at problems seems like it can solve problems, right? But it doesn't. It rarely ever solves. So yeah, it's about being frugal. It's about not having any debt. Not making any compromises. Short-term compromises. And all of that. I mean, these are things that have worked very well for us. And so if someone's starting off and doesn't want to take the route of funding, I think it makes sense only to do it if you're in a business where you can build a core competency, which is very tough for money to buy. If you're in a commoditized business, it makes no sense. You'd rather not do that business. I mean, if I'm building an e-commerce platform today and I'm going to say I'm not going to raise money, I mean, you must be smoking something weird, right? Because there is no way you're going to be around if you didn't raise money, right? But if you're building a technical, if you're building a really complex, say, a trading platform, right? There's something super special. I mean, I don't know what it is, but say a trading platform that can somehow make money for everyone, right? Yeah. So, right? Which is very tough to copy. I mean, if you build something like that, you don't really need money. You can potentially go build it without raising external capital. So
true. Second last question. Regulations. So you have seen that there are many businesses who find a gray area in regulations, and they are built on top of those gray area, and they scale up very fast. And the fact that they scale up, eventually regulator has to come with the term and accept that business model. And we have seen, Bitcoin, and we have seen stock market games and all those things. So because we all come from that background of follow the regulator, right. But there are a section of people who say that, oh, we will change that regulation, not to worry. Right. So something which is happening with Bitcoin, and you have been also very candid in media that you are seeing that so many people are joining that whole Bitcoin wave, which may be good, may be bad, but that's a gray area. And now this budget has done something which is not making it black and white, but still they have kind of recognized that asset class. Did you made a statement a few days ago? I saw it in a media that you are open to getting into Bitcoin.
I mean, I said if SEBI gives its blessings. So
okay, so it has to be driven from regulator, and you will only do things within the ambit of regulation. All gray area is out, always out for you.
I mean, right from the start. I mean, see, the thing is, one of those things that has also helped for us, in the journey is almost having like a regulatory foresight. Like, how you have a foresight, how market situation changes, right? So I don't know if I've said this before to you, but one of the reasons we started Zerodha in 2010 was because the short margin penalty was introduced on futures and options.
Oh, yeah.
Right. So it started in 2011, but we knew in 2009 because, after financial crisis, SEBI came and said, what? Now every broker has to collect minimum margins for futures and option positions if you are held overnight. Right? Yeah. Because until then, it made no sense to become a stockbroker because you had to take unlimited risk to make 20 rupees. It didn't make any sense, right? But when you knew that now that SEBI has taken the direction saying every broker has to collect margin, now you know that the risk is capped, right? And that's when 20 rupees per trade made sense. It didn't make sense until then. We started commodity trading, broking in 2012-13. And we did it only after short margin penalty was introduced for commodity broking, right? So similarly, for example, this intraday leverage is going away. It was obvious that it's going to happen at some point of time, right? Right. And so we never took that route of saying, I want to attract customers offering unlimited leverages because one, it's not good for the customer. Two, I also know that regulatorily it's not the right thing to do as well, because while there was no explicit regulation saying you shouldn't give too much leverage, but in spirit the regulator was saying that brokers should do what is right for the customer, which is not to give. So we've lost a lot of business. A lot of our customers, like I remember on expiry days, there were brokers who would give unlimited leverage for writing options, right? And that too, using one customer's fund to fund another customer, right? So we've never done that, so right from the start, we have never, while this regulation has come only last year saying one customer's funds can't be used to fund another customer, but we have, as a business, we have followed that right from the start. So today, when when those regulation comes, it doesn't affect us in any way. We actually, almost benefit out of that regulation coming, because your business is always built with that regulatory foresight, saying, what, these things can happen. So I think, about crypto, I mean, I've said no to investing into each of the crypto exchange. Almost all the crypto exchanges in India, they came for funding, and I probably lost a lot of money, potential money that we could have made by investing. The reason was because I didn't want to even associate my name, my face to it, because I didn't know what the regulation is. And I didn't want to be in a situation where someone from the regulator calls me up and says, Nithin, are you an investor in this company? And who's facilitating something which is not legal, right? I didn't, right? And so I didn't, so we let go of that opportunity, no big shakes, and there was actually one company which said, what, you don't even give me money, become an advisor and we'll give you a stake, right? And so it's like I said, it is tough. It's tough as a business when you know that as a regulated broking platform, you can't offer crypto, but there are very easily you can offer crypto, but you can't. And a lot of customers are using some other platform for it. We're not talking about crypto in itself, because I don't know what crypto, I don't know which side of crypto, you are, but I don't really understand crypto, so
same here.
Right. Apart from that, but if customers want it, we will potentially, we will offer it if there are regulations out there. Sure, but now also in the same tweet, I had mentioned that, I don't know how crypto can be regulated, to be very honest. So it'll be interesting to see the crypto bill and the regulations that come along with it.
Sure. Are you part of that committee as well?
No, I'm not.
They are making big mistakes if they are not keeping you a part of that. Okay. My last question to you is, what next for Nithin Kamath? Yeah. Or do you think about future or next?
Not really. I think, a lot of times, I get asked this question, what after 3 years, what after 5 years? And my usual answer is, I don't know what's going to happen tomorrow morning. So like I said earlier, right? I think it's about getting up every morning, doing something that helps you get better in life as a business, as a person. And I'm very excited about two things now. One is, so our focus over the last 1-2 years has been, how do you help people do better with the money? While as a business we've done well, like the philosophical question we have is, are people doing better with their money because of us? And the answer is maybe no, and really, that's something that, we are all sitting and figuring, how do you help people to make money? So we have this initiative called Nudge. So we have like a bunch of new amazing things coming on that platform, which can potentially help people make lesser money mistakes. Two is, so we have a foundation called Rainmatter Foundation as well. So there's a really cool team that has come together. It's a so we are trying to support non-profits, profits working in the whole climate space and creation of livelihoods. So we are giving back a lot of our success from the business through the foundation. And I'm also super excited about Rainmatter FinTech, through which the only investments I do is through Rainmatter. And I'm very excited about being part of startups that are working on solving money problems for people in India.
Yeah. And what's your vision for Rainmatter? Where do you see it's becoming? Do you have intention of enlisting at least the Rainmatters, if not Zerodha?
No, the thing is, even if you speak to all the startups we have invested in, we have not once asked them ROI in terms of money. So we've, it's always been saying, dude, what is the impact? Is it, are we making difference for people? So it's just that the excitement there is, every investment we do through the Rainmatter FinTech, in my head, it's a write-off. I'm actually looking at it as CSR budget itself, in the sense, it's a way to give back to the fraternity. And I think, amazing startups have come through it, from small case to, to Sensible, to Stree. Like all Learn app. I think I'm very excited that, through this, because a lot of these things, right, we potentially could have built ourselves. Yes. Right. And this was a choice we made again, very early on in our business, saying, do you want to build everything or do you want to collaborate? Right. And we said, you know what, it doesn't make sense to try to attempt to build everything. You know, we don't want to be another Facebook, or we don't want to be ICICI Bank, you know, HDFC Bank. I mean, there is no, I want to be conglomerate who owns everything. You know, I mean, there is no such ambitions in life. You know, and I think collaboration, especially in a world like this, which is very fast, and you know, I think is a better way to build businesses today than before. You know, so.
Fantastic. It was great talking to you, Nithin. You are exactly the same person I met for the first time. Not changed a bit. So I'm very glad. Some people don't change. That's why they reach where they are. So very happy. We are somehow associated, maybe because of the same industry. And I'm very happy, glad that very soon we will have Zerodha integrated in Stockage, so that people who are using Stockage can also transact using Zerodha. So that will give me, I'll be very happy once
I know it's a long time coming. Should have happened much before.
Yeah, I know.
But happy that it's happening now.
So. Yeah. Thank you, Nithin. Pleasure talking to you. Keep doing good and keep making the new generation proud of you and build new India. Thank you.
Yeah. Thanks, Vivek. And thanks for doing this. You know, I mean, I was checking your videos. So hopefully you can also, you know, do your bit about, you know, market education and all of that. Thanks.
Oh my God. I hope you really enjoyed it. I did. He's amazing. And as I said to him, that he's exactly what he was when I met him first. He's really inspiring, someone you should look up to. And all his words are so important for us, real market participant, to adhere to as well as to implement in our life. So guys, I hope you liked it. And I hope you're going to share this video with your friends and family. Thank you so much for watching it. Bye-bye and take care.